So let's talk real quick interest rates before we talk about how that all transcends into the real estate market. Interest rates are crazy, man.
They're the, and we talked about it a couple weeks ago, they're the most unpredictable interest rate environment that I've seen in 15 years. You know, we've both been doing mortgages a long time, and on a day-to-day basis, we can usually get a really good feel for how interest rates are going to perform. Not a crystal ball type position, but we can always really get a feel like, hey, give it a couple days. Here's probably what's going to happen. Here's what I'm seeing. And most of the time, I think, you know, we've both been right when we're advising our clients like, hey, should we lock today or just give it a couple more days? But right now, it's literally, if you wait, you could cost yourself an eighth to a quarter in interest rate either way on a good and bad, because it's really unpredictable, and a lot of it is really just, there's not a lot of fundamentals to it right now. A lot of it's just based on reaction to testimony by the Fed, and they've always had a ton of control of this stuff anyways, but now they seem to have a ton more control because nobody really truly understands the direction of interest rates, and their comments are really impacting the market in a unique way.
Yeah, it's very different than fundamentals and financial data driving a market.
Yeah, anytime you have the Fed involved and the U.S. government involved when buying mortgage-backed securities and buying their own debt, okay, the U.S. is printing money and creating debt in which they're buying back from themselves. Of course, you're going to have an interesting, unstable type rate environment.
Yeah, when only 6 people understand what's going on, it's right.
And that was interesting watching like the Fed meeting this morning. I got up really specifically to watch it, and I think Bernanke, because interest rates had such a swing over the last basically month where they went up a point and a quarter, and I think Bernanke and the Fed realized like, okay, that really wasn't our intention to have it go up that fast. That their intention was to ease into it where rates would slightly start going up over time. So that way it's not such a shock to the economy and such a shock to buyers or people looking to refinance. But I think he was a little too aggressive on his comments a couple weeks ago that realized, wow, what I say really has a huge impact. Now there's a lot of backtracking going on.
I'm glad he figured that out. Like nobody was paying attention to the guy.
Well, I think what's interesting is he says something that he thinks seems, and they do a lot of thought.
Diplomatic.
I mean, it's very, very manipulated comments with a very clear intention. But when he put his intention out there, it came off and was interpreted in a way more aggressive way. Whatever his unintended consequences were came to fruition. So they had to backtrack and say, well, unemployment's better, but we're not quite where we want it to be, so we'll wait and see.
Yeah.
Okay.
You know, what's interesting is you have the mortgage rate market that has really gone up. I mean, a drastic amount, like 1%, 1.25% over the last few weeks. Mm-hmm. And I was also reading today in Mortgage News Daily that it hasn't necessarily affected prices. It's just taken some people out of the market. And, you know, in some ways that could be healthy. And this is a national perspective, so it may be different locally. But in some ways that could be healthy because, you know, 40 offers on a house is a little ridiculous. It needs to be spread, you know, somewhat through. So it is interesting to hear that it hasn't been affecting prices. It's just been maybe affecting what buyers go buy. Is that fair? The amount of buyers in the pool?
Correct. I think that we have seen a little bit of kind of a slowdown as the multiple offers with, you know, a few buyers being eliminated or buyers kind of having to redirect now their price point that they're looking at because of the change in the interest rate.
But it seems like the buyer pool was big enough that it didn't actually affect housing prices. I mean, if you have 40 people making an offer on a house, 20 of them can still qualify at the higher interest rate, right?
We had a large buyer pool, but the biggest issue we've seen here on the east side has been the low inventory levels. So to take a few of the buyers out of the market will kind of help even out a little bit. Yeah.
So with the rising interest rates and with you guys working with so many buyers and sellers, what are some of the questions you are getting? You know, we talked at the beginning of the hour about people being kind of fear motivated, fear of missing out on low rates, fear that they're going to get priced out with higher interest rates. Are there specific questions you guys are fielding about mortgages as it pertains to buying or selling houses?
Absolutely. Bridget and I just met with someone yesterday, and that was one of their first questions. We're talking about we were thinking we would buy something in January, but I get the question is there, direct as it Ryan, is there a risk in waiting? And should they have a bigger sense of urgency in buying something now versus waiting until, say, January.
I had this exact same conversation with a buyer yesterday who came in and said, I just want to kind of get an idea of what's available. I'm going to sell my townhouse in a year, and I want to buy a house in Bellevue for around $400,000. Okay, so first question was Bellevue, $400,000 house. Okay, let's take
kind
a
of
step
unfortunate
back.
And
it's like, well, I just had to say, I got to know why you waiting. What's your motivation for waiting a year? It's a great time to sell. It's a great time to buy with home prices continue to be on the rise, most likely, and interest rates on the rise. He said, he didn't really have a good answer. He just said that was kind of what his plan was. So what I told him is my best advice to him was go through the process, get pre-approved, because the worst thing that could happen is that perfect property, the one you've been waiting for, right in your price range, comes on the market tomorrow, and you're not in a position to make an offer. Because the reality is, if $400,000 is his cap, for example, that this time next year, it could be that same house is now $430,000 to $450,000, and that interest rate being, instead of being 4.5%, is now 5.5%. And here's the two ways it affects it, with payment, not only in the higher purchase price and more down payment, but also on the interest rate. So I think that's probably the biggest disconnect, is people get used to these interest rates and what their affordability is, and then if they decide to wait, that we have to look at logically that prices have a lot of room to still go up, and interest rates definitely are going to go up. That both those things will either A, put them out of the market, drive them out of a neighborhood, or drive them out of the neighborhood they want to buy in.
Gotcha.
When people start to realize the rates are going up, I mean, we've talked about, maybe Ryan talked about, kind of getting prepared, being even more prepared now. Have you seen more people jump into the market or jump out, and why? Because of what you've seen in mortgage rates?
I'm seeing more sellers getting into the market, and I think their motivation is they want to sell so they can buy, because now they've decided, okay, prices are good enough for them to sell their home, and they want to be able to get a home bought before interest rates go up any further.
Like a healthy market. It's not like a normal real estate market.
Right. Yeah. And so I do think that that's kind of made people decide that, okay, now is the time. It's probably not going to get any better than this. Our home could still go up in value, but we're going to be paying more on the other side. And I think people have kind of finally gotten that message.
Yeah, it's a message we've been trying to give people for about a year now. Like, hey, look, if prices are going up, interest rates are low, this is the time. And, understanding that most sellers end up being buyers at some point in time, really does make a huge difference. Because if your cost of money is higher when you go buy a house, not only are prices going up, but now the cost of money has gone up, which is kind of adding insult to injury. And I think as a lot of people take that second step, at the beginning of the show I was talking about, it's one thing to be a first-time home buyer, take that first step into something. But when it comes to that second step, buying that second house, or selling and then buying a second home, or I guess not a second home, but move up or move down or whatever you want to call it, buying another house, you really do have to take in perspective different items. If all house prices are going up and you're buying something bigger, guess what? The house you're trying to buy is also going up in price. And so there ends up being a lot more variables in that second purchase, or that second time you do just about anything, in the exact same way you guys have taken some variables into consideration with your new real estate company and presented that to the market.